Powell's net worth soared. Jerome Powell didn't start out as a financial titan. He was born into a wealthy Maryland family in 1953, but his path to the Federal Reserve wasn't predetermined. He studied geology at Princeton, then law at Georgetown. After a stint at a law firm, Powell joined the investment bank Dillon Read in 1984. That move changed everything. Working in finance during the Reagan era, he built connections and financial expertise that would define his career. By the time he was appointed to the Federal Reserve Board in 2012, Powell had amassed considerable wealth through his banking career. His appointment as Fed chair in 2018 elevated both his influence and his net worth to unprecedented levels. Let's look at one specific moment that illustrates Powell's financial strategy. In 2020, when the pandemic hit and markets crashed, Powell made an unprecedented move. The Federal Reserve slashed interest rates to near zero and launched massive quantitative easing programs. While most people were panicking, Powell's personal portfolio was heavily weighted in stocks and bonds, assets that immediately benefited from this monetary stimulus. Here's the concrete play. When the Fed floods the market with cheap money, asset prices rise. Powell's net worth, which hovered around $55 million before the crisis, surged as stocks rebounded and bond prices climbed. His decision to inject trillions into the economy didn't just help the markets recover, it directly enriched his own holdings. But here's where it gets interesting. While his wealth compounded, the broader economy faced consequences. This massive stimulus eventually contributed to the inflation spike we saw in 2021 and 2022. Regular people watched their purchasing power erode while asset holders like Powell watched their net worth expand. The policy that made Powell wealthier also created the economic conditions that squeezed ordinary Americans at the grocery store and gas pump. That's the contradiction embedded in his position. The tools that enriched him came at a cost to everyone else. Powell's tenure as Federal Reserve Chairman fundamentally reshaped the American economy. When he took office in 2018, unemployment sat at roughly 4%. By implementing aggressive interest rate cuts and quantitative easing programs, particularly during the pandemic, Powell engineered one of the most dramatic monetary expansions in history. The Fed's balance sheet ballooned from under $4 trillion to over $9 trillion at its peak. This wasn't just theoretical economics. Real people felt these decisions immediately. Consider what happened to asset prices. The S&P 500 nearly tripled from Powell's appointment through 2021. Real estate valuations skyrocketed. For someone like Powell, whose wealth is heavily concentrated in stocks and real estate holdings, these weren't abstract policy outcomes, they were direct transfers of value into his portfolio. But the broader economic impact tells a more complicated story. While asset holders like Powell prospered enormously, ordinary Americans faced surging inflation. Prices for groceries, housing, and gasoline climbed relentlessly. Wage growth couldn't keep pace. Savers watching their cash holdings lose purchasing power year after year faced a different reality than equity investors. Powerful monetary policy creates winners and losers. Powell's policies created spectacular wealth for those already holding significant assets while ordinary Americans bore the inflationary costs. The irony is stark. The man controlling the money supply benefited more than anyone from the money he created.